Hello, everybody. Welcome to Tuesday. The S&P 500 was up 0.03% today, so just a little bit, actually. The Dow was actually up the same amount on a percentage basis. Interesting today, at the beginning of the day, it was kind of the Dow type of stocks, the reopening stocks from, that we've been talking about for a while here that were doing better. And then in the end, by the end of the day, it was actually kind of the tech stocks and the newer, stocks that we were talking about that did well last year that ended up being the winners. So kind of an interesting rotation that happened, in the middle of the day. But I think what's important today is really the reporting on the consumer confidence survey. So they have a thing called the Consumer Confidence Index, which is a part of the survey. And that index has actually gotten all the way back to where it was prior to the pandemic in February of 2020. So that's a really good sign. Two-thirds of the movement of the S&P 500 has to do with consumer spending. So these surveys can be really important to kind of see what's going on as far as that goes. In that survey, consumers, are asked questions about, how they feel about their own finances, their job prospects, the economy, those types of things. And they indicated that they are interested in spending more money on homes and automobiles and major appliances and vacations, amongst other things. And so this is really important. This is exactly what we were talking about kind of in this reopening, is that this, consumer starts to feel more confident. They have more cash as a whole. We know that already, and start to spend that. And then of course that leads to earnings. And then eventually that leads to the movement in the price. Now, you have to remember, though, that the market is a forward-thinking mechanism. So it's already priced in a lot of the current situation with consumers. And all those people that said the market was going to fall apart around this time last year were wrong. And basically what has happened is the market was right in the fact that it's kind of come up and it's reflecting what is actually happening. But I do think that this is kind of the beginning of that consumer spending cycle. Mobility data that shows how much we're moving around is still fairly low. It's about 18% below where it was back in February of 2020. And so as people get out more and more and, they're feeling more confident, I think that's what's going to create this scenario where the second half of the year could be a good time period for the stock market as these earnings come through. And generally speaking, the one thing we have going for us that could drive price up farther is the fact that we keep exceeding the earnings expectation. So if you've kind of priced in a certain level and then we jump up even higher, and that would be a great thing. And so I think that's what we're going to be seeing. And the market is really looking forward to this second quarter earning results, which are coming out here over the next 4 weeks. And so that's going to be, usually a little bit of a volatile time, but I would suspect that, companies are doing quite well, especially when you look at this consumer confidence number. And I think people are feeling good about, the scenario as a whole. Obviously, there's all kinds of little things that we could worry about, but overall, this is a heck of a lot better than it was, right? So things are getting better, and that seems to be really helping, at least with people's thoughts and those types of things. So good things. Look forward to seeing what's going to happen tomorrow, and I will look forward to talking to you then. Thank you very much.